So we are saying that when you're doing audit, that test that you do, and the first test is called control test or test of control. So, Sarah, what we are saying here is that as an auditor, before you start auditing, you need to have a good understanding of the client's internal control system. You need to understand how they operate. You need to understand the authorization process. You need to understand the policies. You need to understand the procedures. You need to understand how approval process takes place. If everything is being done perfectly, then we are saying that the controls are strong, because somebody cannot just pass a transaction without somebody authorizing or knowing. So there is something called the maker-checker relationship. Maker-checker relationship. Now, if you have confirmed that this test is strong, then the auditor can now do what is called a substantive test. Substantive test. Substantive test is normally a test that is done to test other areas other than control. If there is any test that you're doing during audit, any test that you're performing during audit, and that test is not testing the control system, it is testing other areas, then that is now substantive test. Now, we are saying that as an auditor, before you rely on the internal records, you need to test that controls are strong. Controls are strong, so that whatever you're generating, whatever report you're being given, you can actually depend on it. And that is why that particular point we said that evidence generated internally, especially where internal controls are effective, can actually be reliable. We also say that a good evidence is also an evidence that has done what? An evidence that is obtained by the auditor mwenyewe. Evidence obtained by the auditor himself is a good evidence more than or compared to what is being given by other people. If the auditor himself has obtained the evidence, it is better than whatever is obtained by other people. An auditor in documentary form is also a good, an evidence in documentary form is also a good evidence. Evidence in documentary form is a better evidence. And then finally, we say evidence in original documentation is also a good evidence. We have looked at examples of assurance engagements, and one of them we say that the first one is audit of financial statement. That is an assurance engagement. The other assurance engagement is a review. A review is also assurance engagement. So those are two. The first one is an audit of historical financial statement. That is the normal statutory audit. That is part of assurance engagement. For those who are joining today, or maybe those who are our guests today, we are saying that this particular topic in AAA, Advanced Audit Assurance, there is term called assurance. And we define an assurance as an engagement where the auditor or the practitioner is expected to express an opinion which is intended to increase the level of confidence, meaning the opinion or the report that the auditor is going to give is aimed at increasing the level of confidence of the users or enhancing their level of confidence. Therefore, there are types of reports where you are expected to increase the level of confidence of the users. Yani unataka hao watu wakuamini, wajue nini inaendelea, right? So, those kind of reports where the auditor is expected to increase the level of confidence in their report, that is what we call assurance engagement. But then non-assurance engagement, the auditor is not expected to increase the level of confidence or enhance the level of confidence. We have looked at examples. The examples in assurance engagement, we talked about, number one, the normal audit that we normally do, which is the audit of historical financial statements. The second one is a review of the financial statements. A review. Review is like a cousin to audit. Review is about an investigation that is done shallowly. Ile unafanya tu hivi kijuju. You are not doing an in-depth examination. So audit is normally detailed or in-depth examination, but review ni ile unafanya tu shallow, juju, right? So they are almost the same. The procedures are the same. The intensity varies. Another example of assurance engagement is the risk assessment. If you're doing risk assessment, that is assurance engagement. We have system reliability test or report. You are trying to do system audit to check whether it is reliable, whether it is adequate, and it has got the right integrity. It has got integrity. That is a system that you can depend on. System that can give you a report when you want. A system that does not, cannot be editable. That is a good system. So we are talking about there is a system reliability report.
Got showed up, and
somebody's in class, two classes at the same time. Somebody's in two classes at the same time. That is Miller. Sorry for that. Miller, when you concentrate on this one, utaelewa hii pia. The next one, we talked about review of internal controls test or controls. We talked about procedure audit. We talked about compliance audit, and there are so many. As long as that report, you are intending to increase the level of confidence, then it is assurance engagement. Then we gave examples of non-assurance engagement, examples of non-assurance engagement. Examples of non-assurance engagement. The first one, we call it agreed upon procedure. Agreed upon procedure. That is the first one. We have agreed upon procedure. Those are non-assurance. Agreed upon procedure is non-assurance. The second one, compilation engagement or compilation report. Compilation engagement or compilation report is also another type of non-assurance engagement. We talked about tax return. We have bookkeeping, management reports, management report. Those are examples of non-assurance engagement. Management report, that is example of non-assurance engagement. So those are 5, right? Those are 5. Now, agreed upon procedure, compilation engagement, tax return, and bookkeeping, we shall be able to look at them in detail today. So for now, I'm hoping that you saw the last one. The last one is called management report. For now, I want us now to look at what we did last. Where did we handle last? After that review, what did we handle last? The types of assurance engagement. Types of assurance engagement. Can somebody give me the types of assurance engagement that we learned about? The types of assurance engagement. Can you state them? We learned about types of assurance engagement. Give me some of them.
Direct reporting.
Direct reporting. You have your books. So can you give me the way I gave them to you? Just return to the sender what I gave you. I say that the types of assurance engagement can be classified into 2. The first classification is called as at assurance level. And under this category, that is a category, under this we have 2 types. The first type is called reasonable assurance. And the second one is called limited assurance. Reasonable assurance and limited assurance. The second category that we talked about is now called as at attestation, assertion based, So under this attestation level or assertion based, under this we have two types. We have direct reporting and then we have attestation report. Or the other name of attestation, what did we say? What did we say as the other name of attestation?
Assertion.
Assertion based. Now we say that under reasonable assurance, this is the one that is normally done in audit, where there is a high level of assurance or a high assurance level. Let me just show you the differences between this. So I want to say that the objective of a reasonable assurance, is to increase the confidence level of the users. The objective is to increase the confidence level of the users. The objective is to increase the confidence level of the users. The objective is to increase the confidence level of the users and reduce the risk level to a lower level and reduce the risk to a lower level and reduce the risk to a lower level. The objective is to increase the confidence level and reduce the risk to a lower level, to a lower acceptable level. You can add like that, to a lower acceptable level. Reduce the risk to a lower acceptable level. Reduce the risk to a lower acceptable level. Reduce the risk to a lower acceptable level. To a lower acceptable level. It takes the form of a positive form of opinion. It takes a positive form of opinion. It takes a positive form of opinion. And I gave example of what a positive form of opinion is, right? It takes the form of a positive opinion. It takes a form of positive opinion. It takes a form of positive opinion. An example is audit of historical financial statement. An example is audit of historical financial statement. An example is audit of historical financial statement. So we have reasonable here, assurance, and then we have limited assurance. So under this, we said that this one is where the objective is to increase the level of confidence but reduce the risk. It takes the form of positive form of opinion. And example here is audit of historical financial statement. Here, under limited, you can say under limited that the objective is to reduce the audit risk to a low level. The objective is to reduce the risk level to a low level, but not lower than that of reasonable assurance. Means that you can reduce the risk here, but it cannot go lower than that of reasonable assurance. The objective is to reduce the audit risk. The objective is to reduce the audit risk to a low level, but not lower than that of reasonable assurance. Reasonable assurance, the risk is lower, more than this. Example in this particular one, limited assurance, the example is a review engagement. And it takes the form of negative form of opinion. It takes negative form of opinion. Takes the negative form of opinion. Takes the negative form of opinion. It takes a negative form of opinion. So now, I want now to look at the differences between the two. Differences between reasonable assurance and limited assurance. Number one, you look at it in terms of scope. This one has got unlimited scope. Meaning that when you're doing audit, we say that audit is falling under reasonable assurance. When you're doing audit, your scope should be unlimited. You don't have limit. You can access anywhere, everywhere, anytime. But this one is limited because you're not going to do in-depth examination. Limited scope. In terms of opinion, form of opinion, remember, when we talk about form, we are not talking about type of opinion. Form is different from type. Form, this one takes positive form. This one takes negative form. In terms of the risk level, this one is a high risk. No, this one is lower risk compared to this. This one is normally a higher risk. In terms of instead of requirement, this one is statutory requirement. It's required by law to do audit, but it is not required by law to perform a review or to do limited assurance. Not a statutory requirement. Then in terms of example, this one example is audit. Example here is the review. Audit and review. Audit and review. So those are the differences between the two. Those are the differences between a review engagement and audit, and a review engagement and audit. This one is a review. Review, if they ask you about the difference between the review and audit, the same applies because it is under limited assurance where review falls. Review is an example of limited, while audit is an example of reasonable assurance. How much is this unit? Somebody is asking. We charge 4,000 per unit. 4,000 per unit. And remember, I don't just teach this one only. I'll also teach you leadership and management. We have all other units going on. But personally, this semester, I teach leadership and management and audit. Though I also teach, you can also get my videos for FM, which I know most students like that as well. So let's now look at the examples of, you can contact me, Mila, you can contact me on 072683 9808 072683 9808. So write that number. You can contact me for classes, so that I can give you a pay bill. You pay and join immediately. Let us now look at the other examples of assurance engagements, types of assurance engagement, which is now categorized under attestation level. So in attestation level, here, the first level, which is assurance level, we were comparing or looking at the types in terms of, the level of assurance. That is why we classify under assurance level. How much or to what extent are you assuring us? Is it limited or unlimited? Is it high level or low level? But now, in terms of assertion, we are looking at it in terms of who is doing the work. Who is doing the work, right? So we are looking at this engagement according to the person executing the work. And that is, number one, we are talking about direct reporting. Direct reporting. In direct reporting, it means that it is the auditor who is directly involved in the execution. He will perform the work and report. So that means that the auditor will do the investigation, he will perform the analysis, he will write the report or have the observation written and then give a conclusion, right? or give an opinion. So it's actually entirely involved in this particular exercise. Therefore, we call it direct reporting. It's directly involved. That is direct reporting. You can say that under direct reporting, the practitioner is directly involved. Under direct reporting, the practitioner is directly involved in the performance or directly involved in performing the measurements. The auditor or practitioner is directly involved in performing the evaluation and the measurement of the subject matter. He performs the evaluation and the measurement of the subject matter. Mwalimu, is there a way you can send me notes? I normally send notes after the syllabus is covered, after the topic is done. Yes, you get notes. Lakini lazima nianze kwanza nimalize. Contact him to give you pay bill each. Thank you so much, Sarah. So I'll share with you, Sarah. Wacha tumalize, tukishamaliza, then you do. Yes, I need kituma. Hawataingia class watasema mwalimu si alituma notes. Notes ziko nitajisomea. Alafu ikifika time ya mtihani wanaanguka. Na wakianguka ni jina yangu wataharibu. Watasema I was in your class and I failed. I want to retake. I don't like that. Result ikikuja nataka kuona mwalimu, honor, you did a good job. So the only way we can do that is through you attending class first before we share the notes. And then of course we shall also look at past paper revisions on the same, right? So I want you to say that in direct reporting, this is where the auditor is directly involved in the measurement.
Enda buklare nataka kusoma. Niko class.
Yes, we tell them that you're in class. Now, is directly involved in the evaluation and measurement of the subject matter. Evaluation and measurement of the subject matter. Evaluation and measurement of the subject matter. He obtains a representation. He obtains a representation from the responsible party. You know, when you talk about you obtaining representation from the responsible party, who is the responsible party? The responsible party is the person who keeps the subject matter. Remember, we said that the subject matter is the item under investigation. In audit, whatever is being audited is what we call subject matter. That can be the financials, that can be motor vehicle, that can be system, that can be procedures. Now, the person who is in charge to make sure that all these are done, the books are well kept, the items or motor vehicle or assets are secure and all recorded, the procedures are being followed. That person who takes charge is the person we call responsible party, because he's responsible for ensuring that the subject matter is in a proper condition. Now, we are saying that in this case, we can also get what is called a representation letter. Whenever you're doing audit, and at the time when you're doing audit, you are not able to confirm something, you always run back to the responsible party. Unaenda kwa management, unamuuliza, can you confirm to me? So for them to confirm that, they normally put it in writing, and that is what we call a representation. So during audit, we also get a representation. They get that confirmation in writing. That is what we call a representation. Now here, we are saying that in direct reporting, the auditor performs the evaluation, measurements of the subject matter, or obtains a representation from the responsible party that has performed the evaluation. So he can get the confirmation or representation from the responsible party, so that he can be able now to analyze and give report. In order to analyze and give opinion or report. Then number two, we are talking about assertion-based. Assertion-based. In assertion-based, it is from the word to assert. To assert or to attest, they mean the same. To assert means to claim. Assert is to claim or make people believe. Make people believe. So make people believe. So we are saying that in audit, sometimes somebody can go and do the work on your behalf and present to you and wants you to believe that that is what it actually represents. So someone else does the evaluation, someone else does the measurements, someone else prepares the report and give you to come and do your conclusion or do a review and give an opinion. In that particular case, you are not directly involved in the engagement. Yani umepewa na unaambiwa upeane opinion. Therefore, unlike this one, which is where the auditor is directly involved, in assertion, someone else, and that person can be the management preparing the books and giving you to come and give an opinion. Therefore, that type of assurance is called assertion or attestation engagement. We talked about the opinions, forms of opinion. We have two types or two forms of opinion. The first one is called a positive form of opinion. These are not the same as the type of opinion. Forms of opinion are different from types of opinion. So, yes, types of opinion. These are types of audit opinion. Number one is called unqualified. Right? Number two is called qualified. Number three is called adverse. And then number four is called disclaimer. So these are what we call the forms, types of opinion. Those are types of audit opinion. But the forms are only two. They are positive and negative form. The negative one is normally given in review engagement, where there's low level of confidence. You are negative, you're rather pessimistic. You are pessimistic, all right? So what happens here? The auditor in his report will say that after reviewing the work, nothing has come to our attention to believe that the financial statements are not true or are misstated. So it means that the auditor is pessimistic. It looks like the auditor expected something to be wrong. And that is why the auditor uses the word like, nothing has come to my attention. It's as if something should have come to the attention of the auditor that things are wrong. He is very pessimistic in his sound, in his tone. So he will say, nothing has come to our attention to confirm or to make us believe that the financial statement is misstated. Under positive, the auditor owns the report. Why? Because in positive, it is normally under audit. And under audit, you have done a thorough work. You have done a very intensive and in-depth evaluation or examination. So you are confident. So you can confidently say that this financial statement is okay. So you say, in my opinion, the financial statement represents true and fair view. You are very confident with that. So therefore, these two are different. This one you normally give in a review where you have not done a good job, and this one you normally give in audit where you have done a thorough job. Those are types of opinion or forms of opinion, forms of opinion. Now, I want us now to look at review engagement. Unless somebody has any question on what we have done, I was just basically doing a recap on what was done in the previous classes. So I want us now to look at a review engagement. Any question? Yes, Sarah. Did I mute oh, I muted you guys, eh? Let me unmute. Somebody, you need to make sure that your background is silent. Go ahead.
Okay, Mwalimu.
Yes.
So does it mean that in like forms of opinion, positive form is majorly used in direct based, and negative is used in assertion or attestation?
Yes, if you look at it from the types of assurance, then that is what it means. Because in direct, you had an opportunity to investigate yourself and confidently come out with opinion. So you own it. You can positively give out your mind. But in assertion or assertion-based or attestation, the way you look at it, we call it attestation. Somebody else did the work. Alafu unaambiwa ati peana opinion. Are you even confident of what you're saying? So you can easily say that we apply the negative form because you don't want to own the report. Ni kama una disclaim yourself. So you'll say, nothing has shown me that these books are okay, not okay. Hakuna kitu, hakuna dalili inaonyesha kwamba ni mbaya by just reviewing, by just looking at it from outside. But in the other one, yes, you had an opportunity to perform a good work. You can own it confidently.
Okay, thank you.
Welcome. Any question? So we can proceed. I talked about review engagement, and in review, I said that review is just like an audit. And I said that the procedures that we use in review are the same. Do you guys remember the audit procedures? We can still remind ourselves about the audit procedures. You say A, E, O, U. I know most of you are wondering why I call this E. That is how we were taught in primary, lower primary. We were taught that this one is E, not I. So A, E, O, U. That is what I was taught. I don't know what you guys were taught. Now, this one is analysis or analytical. This one is inquiry. This one is inspection. This one is observation. This one is recalculation. Or reperformance. Now, these are the audit procedures that you normally use. And these procedures, you always perform them on something called assertion. So you apply this on assertion. Assertions are basically claims, as I said, and you remember them with 𝗬𝐶𝐂𝐬𝐧. 𝗬𝐶𝐂𝐬𝐧. So this one is accuracy. So when you're auditing the subject matter, that subject matter can be, let's say, the financials, the figures that are posted. You want to test whether those figures are accurately posted, as claimed or asserted by the client. As claimed or asserted by the client. You can test by doing some calculation to confirm whether they are accurate. So you're applying the audit procedure to test the assertions on the subject matter. You can also test on completeness. You can test whether they are complete. You can also test whether they are classified well. You can also test on their location. You can test on the cutoff. You can test on the occurrence, whether transactions occurred or you are supplying error. You can test that. You can also test on valuation. You can test on existence. You can test on rights, that is ownership, rights and obligation. Whether you really own it, rights and obligation. So what are you going to do? You can use performance or recalculation to test on the accuracy. In completeness, you can be able to do inspection. You can inspect the records to check if everything has been posted. If the system shows complete record. You can look at the classification by also inspecting and also inquiring. You can also observe by just looking at it. You can be able to know that this one has also been classified. You know, sometimes when you're given the financial statements, you can find misposting. Where, for example, an accountant has gone to purchase some things at maybe from the warehouse or from wherever, supermarket. Then you will find that in the same list, Apple supermarket, wameweka things like padlock, stapler, pamoja na paper punch. Wameweka hapo na vitabu, notepads, wameweka kalamu hapo ndani, na pia amebuy kaunga for lunch, you know, or for stuffs, or for breakfast things, bread. At the end of the day, akikuja na hizo zote, what will happen? You'll find that maybe he has posted all of them as expenses. So that means that akikuja na ile list, he has not taken the time required to allocate the expenses on their respective vote head. You need to go to specific vote head and post. Kama ni, for example, breakfast items or consumables, you need to go and post them under consumables, right? Or office expenses. If it is stapler, you go and post it under assets. Though both of them will be edited, both of them will be debited, but you need to know where to debit. You don't just expense everything. So you'll find that one of the expenses has gone up. Kumbe kuna stapler hapo, kuna paper punch ameweka hapo, kuna printer ameweka hapo, expense zote. They have not done what we call the allocation.